Hello and a good morning. You're tuned into Market Cafe. I'm Ankita Saxena, and in the next half an hour, I'll take you through all of the transpired on the global front, the global markets, and of course the geopolitics, and that is really moving the markets, and the oil prices that are on the boil. Let's take stock of how the Wall Street shaped up yesterday. Well, we did see the markets go tumbling down after Donald Trump announced that he is putting the Iranian blockade, so named because it is only going to stop Iranian ships and customers from, entering or leaving the Strait of Hormuz. And on account of that, we did see the oil prices surge. Brent crude saw a sharp uptick of 9% for its biggest one-day gain since 2020, and that sent the markets tumbling. We had Dow Jones that ended the day with cuts of 138 points, S&P 500 that was down 0.7%, and Nasdaq that shed more than 400 points, 1.5% of a downtick coming in as far as Nasdaq is concerned. So fresh geopolitical tensions are back on the table, and of course we had the inflation data as well. Inflation data for June is also on deck with the latest consumer price index reading that is scheduled, and Kevin Warsh also will meet with lawmakers on the Capitol Hill as a part of his two-day Humphrey Hawkins reports on the monetary policy. So that's also something that we are waiting and watching out for, the inflation data that will set the path for future rate cuts for the Fed. So that's something that the markets are watching out for. But for now, it's the oil prices that are back in focus. And like I mentioned, oil is on the boil. We do see an uptick of almost 9% coming in as far as Brent crude is concerned. As of now, we do see Brent that is sitting at $84.21 per barrel. It is again, over $80 per barrel. In fact, it is very close to $85 per barrel. 1% of an uptick coming in right now. WTI is also sitting at $79.37 per barrel, 1.5% of an uptick coming in as of now. So that's how the crude is faring at this juncture. Let's take a look at the Asian handover, and a sea of red coming in, barring Nikkei. That's the only one that is trading in the green with gains of 155 odd points. But besides that, the Chinese markets, Hang Seng is down 267 points. Shanghai is also trading with cuts of 0.3%. S&P ASX 200 is also down 0.4%, and the implied start to Nifty is also indicating a gap down start of almost 200 odd points. Fresh tensions have erupted around the Strait of Hormuz after US President Donald Trump announced plans to impose a 20% fee on cargo transiting the waterways and reimpose a blockade on the Iranian ports. Now, Trump said that the US would guarantee safe passage for commercial shipping while preventing trade with Iran. The announcement comes amid fresh military exchanges between Washington and Tehran, pushing oil prices higher and weighing on the global markets. Iran responded by reiterating that it remains the guardian of the strait, while signaling that any transit fee should be determined by Tehran rather than Washington. Let's listen in.
No, I never reached that conclusion, but we're hitting them very heavy tonight, as you know. We have tremendous amounts of ammunition. We have numbers that we haven't had in years, and we're hitting them very hard, and it'll continue, and we'll see what happens. But we're knocking out all of their offensive capability, and we're controlling the straits. We're putting the blockade back, and it's a blockade not for anybody but Iran. In other words, anybody doing business with Iran can't go through. Everyone else will be able to go through. So it's a blockade. It's a very strong blockade. The blockade was probably more effective even than hitting them, but I think the combination is the thing that really does.
And the U.S. inflation may finally offer some relief, but not enough to settle the Federal Reserve's nerves. June CPI is expected to cool as falling oil prices pull the headline inflation lower, while core inflation is likely to remain sticky, driven by services and AI-related demand. The data comes ahead of Fed Chair Kevin Warsh's first Capitol Hill testimony, with markets closely watching for cues on the rate path. And Fed Governor Christopher Waller has urged policymakers not to fight the last war on inflation, warning against reacting too quickly simply because the Fed moved too slowly in 2021. While he still sees a credible path for inflation to cool, Waller said that precedent prices pressures from the AI demand, tariffs and geopolitical tensions mean rate hikes remain on the table if needed. And the US budget has taken a bit of a hit from the tariff refunds. June posted a $120 billion deficit, reversing last year's $27 billion surplus after the Treasury refunded nearly $50 billion in tariffs that courts ruled illegal. The repayments outweighed fresh customs collections and comes as Trump's tariff strategy faces fresh legal and policy uncertainty. Even so, Washington is preparing a new round of trade duties later this month. And the AI chip rally has hit a speed bump. SK Hynix plunged more than 15% in Seoul after its blockbuster Nasdaq debut, marking its biggest single-day fall in nearly 2 decades. The sell-off spilled across global semiconductor stocks, dragging Samsung, Micron and the broader chip index lower, while South Korea's Kospi slumped 9%, triggering a temporary trading halt. And India and the US are edging closer to the July 24 deadline on 10% tariffs, and talks over India-US trade deal are still underway. Union Minister Piyush Goyal has dismissed reports that stated India is holding the deal and has asserted that a mutually beneficial deal is being worked upon. Sumita is getting us more details on the status of the India-US trade talks. Let's listen in.
That's right. The framework deal is ready between the United States and India, and it will be signed at the right timing. That's the word that's coming in from India's Commerce Secretary Rajesh Agarwal. He says that the understanding on both the sides is amply clear and trade deal talks with the United States are progressing well. India is looking at a comparative advantage, a preferential market access. He also said that talks are currently on with respect to the larger bilateral deal. They are also happening, and he doesn't see any challenges on that front either. He says that all aspects related to the trade deal will get addressed to ensure that there is sustainability in the trade deal. And this, of course, includes investigations that are related to Section 301. And he says that it is important to have sustainability in the trade deal. So, of course, the decision of what really happens after July 24th, which is when the 10% tariff imposed under Section 122, that really ends. So he says the decision of what really happens after July 24th on tariffs and trade architecture, that resides with the United States. Now, on USTR hearings, which took place a couple of days back, he says that there were 2 sets of investigations that were on. In fact, one set is at an advanced stage, which is related to labor. And of course, India has submitted its response on that front. And he says that the final investigation report can be expected to be out this month. Meanwhile, what's really happened is that Commerce and Industry Minister Piyush Goyal has dismissed reports around the US-India trade deal, which says that India has rejected any quick deal. He says that I had fantastic meetings with USTR Jameson Greer, USTR, when he visited Delhi in June, and both sides reaffirmed their commitment to an agreement that is balanced, that is commercially meaningful, and delivers tangible benefits for businesses, for workers, for farmers and consumers in both the countries. And he also reiterated that the teams on both sides, they remain fully engaged in achieving this objective.
All right, moving on then. The southwest monsoon is continuing its advance across the country, with the IMD expecting it to cover the entire nation soon. In Mumbai, the water availability has improved significantly, with the city's 7 reservoirs now at nearly 50% of the total storage capacity. The IMD has forecast extremely heavy rainfall over Meghalaya, sub-Himalayan West Bengal and Sikkim. Thunderstorms are also likely across Andhra Pradesh, Telangana, Madhya Pradesh, Jharkhand, Karnataka, Odisha and Tamil Nadu. Despite the improving rainfall outlook, the monsoon remains uneven. As of July 16th, India has cumulative rainfall deficit that stands at 19%. And well, with that, it's time for us to slip into a short break. Don't go anywhere, because after the break, we're coming back and getting you all the cues you need to watch out for before the start of these 3 today. Stay tuned. Welcome back. You're tuned into Market Cafe. We're getting you all the cues you need to watch out for before the start of these street. And for all the stocks that will remain in focus, my colleague Meryl is now joining us to talk about them. Meryl, take us through all the stocks that will be in focus today.
Yes, these are some stocks that we're expecting to see in the spotlight in the beginning of this trading session immediately. Starting first with Bharat Electronics, the company's received orders worth 572 crores, which is going to be strengthening its order book further. EMS is also in focus as they've emerged as the lowest bidder for a sewage work project worth 105 crores from UP's Jal Nigam in Varanasi. Emcure Pharma is also in focus today. The company is set to acquire a remaining 12% stake in Genova Biopharma in a 231 crore deal, while Timken India has received Bureau of India Standards licenses for 2 product categories across 2 of its manufacturing facilities. Also in focus today is Wellspun Enterprises. The company signed sub-concession agreements with Maharashtra State Infra Development Corporation, that's the MSIDC, as well as the Government of Maharashtra for Pune and to Shirur. This is for a highway project worth 7,300 crores. And we've also seen PDS in focus. The company has entered a SaaS contract with the global sourcing arm of a leading French headquartered global supermarket. This order is to manage and operate the retailer's textile sourcing operations across nations such as Bangladesh, Pakistan, India, and Sri Lanka. Also, and the final name in focus today is TBO Tech. This is Augusta TBO PTE, the company subsidiary, which sold a 2.05% stake in TBO Tech via an open market transaction. So yes, these are some stocks that we're expecting to see buzzing in trade today.
All right, Meryl, thank you so much for joining us with that. But also let's talk about HCL Tech that will be in focus because of its earnings, and it has delivered an inline set for the first quarter. But the bigger story was AI. The company reported record deal wins of $2.4 billion, maintained its FY27 guidance, and said that AI is now driving nearly 70% of the growth. Darshita is now joining us with the Concall highlights.
Right, HCL Tech's Q1 FY27 results were largely in line to what the street was estimating. If you look at the dollar terms, the revenue declined 0.9% sequentially, coming in at $3.65 billion, but still came in ahead of the estimate. Whereas on the rupee side, the revenue grew 1.8%, coming in at 34,579 crore. Now on the profitability side, the EBIT stood at 5,800 crore with margins at 16.86%, which were both ahead of the estimates, whereas on the PAT came in at 4,600 crore, which was slightly below the expectations. Now, operationally, the quarter remained healthy. The constant currency revenue declined 0.5% QOQ, while the TCV came in strong at $2.4 billion for this quarter, whereas it was $1.812 billion same quarter last year. If you look at the advanced AI revenue, which also grew 10% sequentially, coming in at $171 million. Now, management has retained the guidance on both the company and for the service revenue growth, while if you look at the EBIT margins, the guidance has been retained here as well of 17.5 to 18.5%. It also expects the global data center demand to triple by 2030 and will make an initial investment of 3,500 crore rupee in AI data center with a long-term target of building 50 megawatt capacity. Now, on the AI, management believes that the pricing deflation from AI should remain limited at around 2 to 3% and sees a $20 billion AI opportunity in India, where it plans to strengthen its presence. It also expects the ER&D business to emerge as the biggest growth driver once the discretionary spending revives. Now, finally, management highlighted the improving capital efficiency with company level ROIC at 40.7% and service level ROIC at 47.8%. Now, the operating cash flow remains strong at 19,258 crore and the FCFF stood at 17,843 crore. Also on the Middle East side, the company said its exposure is limited to just 0.5%, indicating the minimal impact from the region.
All right, speaking of HCL Tech, let's go across and listen into HCL Tech CEO and MD Vijay Kumar's statement on retaining the guidance and company's roadmap for AI data centers.
Retaining our FY27 guidance of 1 to 4% at a company level revenue growth and 1.5 to 4.5% for services, both in constant currency. Margin guidance is also retained at 17.5 to 18.5%. And for clarity, this guidance is for organic growth and does not include acquisitions, including the recently concluded the Jaspersoft acquisition.
And Happiest Minds was soaring in trade on the back of its estate sale as the promoter are in talks to sell the controlling stake, with the ITC Infotech emerging as the leading contender. My colleague Avi is joining us with more details on this.
So yesterday, media reports suggested that Happiest Mind promoter Mr. Ashok Soota is looking to sell his controlling stake, and that is the reason the stock surged by 10%. It was reported that ITC Infotech, a subsidiary of ITC, along with a few prominent PE players, will be the leading contenders to buy this controlling stake and will have to come out with a mandatory open offer to buy an additional 26% because of the SEBI acquisition regulations. This transaction was likely to be concluded at a premium to the current market price, and that is what caused the surge in the stock. It is reported that Mr. Ashok Soota holds a 32.3% stake directly and a 11.8% stake in the company through Ashok Medical Research, taking his total stake to 44.1%. However, the company has now come out with a clarification with the filing on the exchange, saying that there is no information which requires a disclosure to the exchange, and the company keeps exploring opportunities which are beneficial to the stakeholders. However, it is important to note that back in 20th March on 2026, there was a similar news report that suggested stake sale of controlling stake of Happiest Mind and ITC being the likely buyer, and that is when the stock had surged 10% similarly. Back then, when the company had come out with a clarification, it had clearly and categorically denied any such developments in this regard. However, the company now says that it keeps exploring opportunities in this regard. So there is a contrast if you read between the lines, and it would be interesting to see how the development would shape up in the coming days.
All right, let's move on to the next counter that will be in focus. Grasim, that has announced its largest renewable energy acquisition in the sector by value and scale. Its subsidiary Aditya Birla Renewables will acquire 100% of the Solanigri power in a deal that is valued at more than 17,000 crore rupees. Rabinder is now joining us with the contours of the deal.
Well, yes, Grasim arms Aditya Birla Renewables Limited will acquire a 100% stake in Solangiri Power Private Limited from Shell Overseas Investment VV Solar, and Solangiri is a holding company of Spring Energy Private Limited and Spring Solar Plus Private Limited, and the enterprise value of the transaction is 17,200 crore, making it one of the largest renewable energy acquisitions in India by both value and in scale terms. And the transaction is expected to close on before 31st December 2026, and the acquisition will be funded through a mix of debt and equity, with capital coming from Grasim's and funds managed by the Global Infrastructure Partners, which is backed by BlackRock. And this deal will add around 5 gigawatt of contracted renewable energy, including 3.3 gigawatt of operational assets and 1.7 gigawatt under construction, and combined with Aditya Birla Renewables existing 4.4 gigawatt portfolio, the group's total renewable energy capacity will increase to 9.3 gigawatt. And following the acquisition, the Aditya Birla Renewables has revised its growth map and is now targeting more than 20 gigawatt of renewable energy capacity over the next few years. And if we talk about the financials of Spring Energy, then FY25 revenue was 1253 crore and FY24 revenue was 1158 crore. And the transaction implies an EV of around 3,440 crore per gigawatt and approximately 5,210 crore per operational gigawatt. And the valuation carries a premium to several renewable asset transactions due to Spring Energy's sizable under construction pipeline, and it is comparable in scale to acquisition undertaken by Adani Green, JSW Energy and NTPC Green, while giving Grasim an immediate large-scale renewable platform with the execution risk associated with greenfield project development. So back of this big acquisition in the renewable energy sector, Grasim industry can be in focus.
All right, moving on from Grasim to the next counter. It was a steady Q1 coming in for Nuvoco Vistas with uptick in top line and bottom line. The capex plans are also on track, and the company is looking to expand its capacity going ahead. My colleague Ashesha is now joining us with the details of that.
Well, yes, so Nuvoco Vistas has reported largely in-line set of numbers. Revenues this time around have come in at about 3,128 crores, which is an uptick of about 9% on a year-on-year basis. Meanwhile, as far as EBITDA is concerned, that too has seen an uptick, but margins meanwhile have remained largely steady at that 18.2% mark. Volumes have risen by about 5% on a year-on-year basis to come in at 5.3 million metric tons. Now remember, numbers are okay, but the major highlight of this quarter matter was the capacity expansion plans, which continue to remain on track. Remember, just a few days back, the company had informed the exchanges about Vardharaj Cement Limited about their capacity and their plant in Surat, where they will be investing about 240 crore rupees. The company has now commissioned this capacity. It will be added by the second quarter of FY27. Other than that, the company has also spoken about other expansion plans, where they said that they are consolidating their footprint in Western as well as Northern India. Progress on project expansions continues to remain on track. One, of course, is in Kutch, Gujarat. The other is also in Viramgram, Gujarat, and that will also be commissioned and operationalized by the second quarter of FY28. Now, as far as their total capacity addition plans are concerned, currently their total capacity stands at about 25 MMTPA, and the company has said that this is likely to increase to 35 MMTPA by FY28. So clearly, capacity expansion plans continues to remain on track, and that is a big positive. Other than that, the management has also spoken about the impact of West Asia crisis, where they said that geopolitical uncertainty has persisted over the last few years. Cost structures across the industry have undergone changes, but they continue to remain watchful of the progress on geopolitical front and its impact on the company's operations. But for now, numbers look okay. But the highlight of the earnings, of course, was the capex plans, which continue to remain intact.
All right. Thanks, Shisha, for that. Let's move on then. And ICICI Prudential AMC has reported a healthy first quarter with profits rising 23% and AUM crossing the 11 lakh crore mark. The company also ruled out any impact of the TER regulations on margins and remains optimistic on the new product launches. My colleague Mithali is now joining us with a detailed breakdown of the numbers.
Right, talking about ICICI Prudential AMC, the company has delivered a steady quarter result for Q1 FY27 with resilient AUM growth, stable yields as well as strong other income supporting its earnings. Now, the mutual fund quarterly average AUM, it has risen nearly 1% on a sequential basis, with the company retaining its second largest share, the position as the second largest AMC with 13.4% market share. Revenue has grown nearly 1% on a quarterly basis, broadly tracking the AUM growth. However, the higher employee expenses led to some sequential pressure on company's EBITDA margins. The earnings beat came from strong mark-to-market gains, which boosted the other income and also drove the PAT up 26% on a sequential basis, ahead of the street expectations. Talking about the equity AUM, it benefited from the market recovery, while the debt AUM was under pressure due to the corporate redemptions amid the tighter liquidity in the system. SIP flows were lower than compared to the March levels, but also recovered in the month of June, with management maintaining that trends remain broadly in line with the industry. Looking ahead, ICICI Prudential AMC has a strong pipeline across life cycle funds, the contra funds, SIFs, ETFs, as well as the commercial real estate strategies. So overall, if you see a steady result for Q1 for the company with strong earnings delivery, but the employee cost, SIP momentum and conversion of the new product launches and their conversion into the cash flow, they remain the key monitorables going ahead.
All right, so those are all the stocks that will be in focus on account of the earnings. But with that, it's time to wrap up this edition of Market Cafe. I'll take a leave. Thank you so much for tuning in.